everyone, I am CA Vibhuti Narang. Welcome to our channel Voxcov Academy. In today's video, we'll be discussing about two newly introduced sections in Budget 2022, that is Section 194R and 194S. So basically in Budget 2022, government came up with two important sections depending upon the nature of business and the types of transactions being conducted among the businesses with their vendors or with their customers and the business promotional activities being carried out. Government came up with this new section irrespective of the fact that there were many transactions being conducted in which the amount of benefits or perquisites were being given by the business or professionals to the other parties, vendors or the customers, or you can say the persons who were promoting the company's sales. So keeping that background in mind, the new section, which is 194R, was being introduced. The section name is TDS on benefits and perquisites of business and profession, and it was applicable with effect from 1st of July 2022. Now first of all, we'll understand what is the applicability on the section. It means on whom the section will be applicable. The deductor will be a company or a partnership firm or an individual HUF having last year turnover more than 1 crore, and in case of professionals, receipts greater than 50 lakh. Deductee will be normally any person or a resident of India. The rate of TDS for this section is 10%. Rate of TDS if the deductee doesn't provide PAN will be 20%. The threshold limit means the limit upon which the TDS will be calculated or over and above which the TDS will be calculated will be rupees 20,000. And can the benefit or perquisite be in cash or kind? So it can be in any form. It can either be in cash or it can be in kind. Now we'll talk about the actual applicability. For calculating the value of the threshold limit, the transactions with the deductee needs to be from 1st of April 2022. But if you talk about the deduction part needs to be checked from 1st of July 2022. So TDS deduction applicability on transactions will start from 1st of July 2022. But if I talk about the value to be counted, it will be from 1st April. For example, I provided a benefit to one of my salesperson of rupees 15,000 on 1st of May. So at that time TDS was not applicable. But on 1st of August, I further provided a benefit of rupees 10,000. Then that 10,000, the limit is crossed, but TDS reduction will be on the remaining 10,000 amount because the applicability started from 1st of July. Now we'll talk about the various issues. Before I start discussing the issues which I have came across in this section, there were two types of circulars which were being issued in the regard of 194R, and what I have done is I have just accumulated all the FAQs and the facts from those circulars. I have created them in a form of a pictorial so that it's easy to understand. So I'll be covering different types of issues, and from those issues that FAQs will also be covered. So first issue is, what if benefit perquisite is in kind or partly in kind? So in my case, the deductor is a company who is deducting or who is giving a benefit of a car or a perquisite of a car worth rupees 8 lakh. Along with that, the deductor is also giving cash prize of 1 lakh. So in this case, what will happen is, before providing the benefit of the car to the deductee, there are two options being provided. Either the deductor himself deduct the TDS before release of the car, that is, he is deducting 80,000 before release of the car and paying 20,000 cash along with the car. That is the first option. The second option is, deductee at his end pays the advance tax and gives the declaration to the deductor that the advance tax on the car is being paid through him in his income tax return. Now, this being a theoretical way means this can be done. This is not an incorrect way. The government has decided that these two kinds of medium will be there through which the TDS will be deducted. But if I talk about the practical application of the same, it is very difficult before releasing a kind benefit. Suppose I'm giving someone an Apple iPhone worth rupees 1 lakh. So I cannot say that I am deducting 10,000 or you pay me 10,000, I'll be paying to the government. So what practically the companies or the deductors are doing, they are grossing up the benefit. So 1 lakh worth or 8 lakh worth of a car will be divided by 90%. So it will be considered 90%. The over and above amount will be considered as your TDS benefit. So that grossing up amount or grossing up concept is now being followed for this section. Talking about the next issue, which is if benefit perquisite is in kind, can the capital asset being used for business purpose by the deductee? So in my example, I have given a car to the deductee. Now, can the deductee use this car as a capital asset in his business profession? So the answer for this section is yes, he can use it for the capital purpose. Along with that, he can claim depreciation for the same. The third issue is benefit to employee under section 17(2) covered under 194R. So 17(2) provide perquisites to the employees, and those perquisites being taxable under section 192, so they are not taxable under section 194R. The next issue here is whether deductor needs to check benefit perquisite amounts taxability in the hands of the recipient, that is your deductee. So does the deductor needs to check whether he is declaring that particular benefit as his income? So this responsibility is not on the deductor. He need not check the taxable income in the hands of the deductee or the recipient. Issue number 5 is whether capital assets covered under purview of section 194R. So my example already was around a capital asset, but yes, the answer to this peculiar question is also yes, 194R capital assets are covered under this section. Sometimes there are benefits given of a kind in which it's like a promotional activity or it's a air free tickets being given, which are not capital assets but they are benefit perquisites. But still, if any capital asset is given, then it is taxable under this section. The next issue is waiver settlement of loans by banks covered under 194R. So if I have taken a loan worth rupees 1 lakh from the bank and I am not able to repay it, or is there any issue, and the government waives some of the amount, either it can be the interest component or you can say it is the principal component, but that waiver or that settlement or that kind of a reduction which is given by a bank is not covered under section 194R, because this is not a benefit. What they are doing is they are just relieving you from the extra burdens, and if you are not even able to recover the principal, they may give you some type of settlement options, but that reduction portion which is given, that is not at all a benefit. So the circular has clearly mentioned that any such kind of waivers or settlements will not be covered under section 194R. The next issue is, are sale discount, cash discounts and rebates covered under 194R? So although they seem to be, and they're peculiarly very big part and parcel of any kind of a business, because if I am doing a sales and if a target is achieved, for example, I have given a target of sale of 1 lakh to a customer and that target is achieved and I am giving a sales discount of 2%, that is a benefit perquisite. But in real sense, what will happen is, because this will be a very routine activity of every business, so what the government has said that this will not come under 194R. So this is a very routine or a part and parcel, or you can say the main business expense. So this will not be covered under section 194R. The next issue is TDS implications of seller giving incentives. Now, seller may be giving incentives in the form of car, TV, sponsorship trips, free tickets, medical samples to the medical practitioners, and second type of incentives is on target completion. As I discussed for the previous issue, that on target completion there may be some incentives, some discounts being given, but not comparing those discounts, this is on some target completion, then this is covered under this section. Talking about the next issue, which is very common, and you will be finding this in almost all the medical industry. Now, this is TDS implication on free samples given to the medical practitioners. Now, as CAs are there, they are having their own COP, and we are also practicing chartered accountants. Along with that, we can provide our services to any company or a CA firm. Now, similarly, in the doctor's line also, there are two types of medical practitioners. One are the persons or the doctors who are self-practicing. The others are the doctors who are providing services to the hospitals. Now, for the medical practitioners, if any pharmaceutical company is providing free samples, then 194R is 100% applicable on that case. But if that pharmaceutical company is providing free samples to the hospital, and that hospital definitely cannot sell or cannot use those free samples through themselves, they will be routing those systems through the doctors appointed in the hospitals. Now, in case of hospitals, there are two categories of doctors. One is the doctors who are working as an employee for the hospital, and the second ones are the doctors which are working as an consultants. So this industry is same as CA industry. One can be a person who is a CA in practice, the other is a CA providing service to the CA firm either as an employee or as a consultant. Now, what happens in this case is, if the doctor is working as an employee, now in that case deduction will be done by the hospital under section 192 for the doctors. The pharmaceutical company for the hospital will be doing 194R. TDS is applicable 100%, but further the hospital will be deducting under section 192 for the doctors. Vice versa, if the doctor is working as a consultant, then in that case deduction by the hospital will be done under section 194R. Now the next issue, which is similar to the same one, whether this section will be applicable to government entity. So it is clearly mentioned, if the doctor is working for the government hospital, then this section is not applicable on the same. Next issue we have is valuation of benefit or perquisite. So all the benefits or perquisites under this section will be valued at fair market value, but in two cases. First is if the benefit or perquisite is already being purchased. For example, I purchase some gold coin, right, to be given at the time of Diwali to some of my customers. Now, right now, if the gold price is suppose 50,000, and at the time I am giving this benefit, the gold price is 60,000, then in that case, the purchase price right now, at what amount I have purchased, will only be the value of that benefit perquisite. The second exception to the fair market value is that if the manufacturer of product, if I am myself manufacturing that car, then what is the sale price of that car? What amount will I realize if I really sell that product in the open market? So that sale price will be the value of the benefit or perquisite, but this sale price will be excluding GST. The next issue we have over here is treatment of reimbursement of expenses. Now, reimbursement of expenses can be of two natures. The first, for example, I being a CA providing a service to my client. Now, if the client is calling me to some other state, the amount he has to incur for calling me as a CA to his client place, the accommodation as well as the transportation or the air freight or whatever medium he is calling me, all that expenses, if it is being borne by that client itself, then it is not reimbursement of expenses. But if that expenses are borne by me in my name and I am availing the GST, then in that case he is reimbursing me that amount, and in that case TDS will be applicable. I have divided this into three situations so it will be more clear. This first situation is, there is a deductor and there is a deductee who is providing some reimbursement for expenses. If the deductor, in my case my client, is paying the amount for that expense, is preparing the invoice, means he is getting the invoice in his name and he is availing the GST ITC component also, then 194R is not applicable. It is a very clear-cut case. Why? Because if he is incurring the expense, the invoice is in his name as well as he is availing the GST ITC credit, then in that case section is not applicable because that expense is a nature of a business expense and it's a routine expense. He is not providing extra benefit to the other party. Situation 2 is totally the reverse of situation 1. What will happen in this case is the deductee is paying the amount, means I am paying the amount, the invoice is in my name and the ITC credit is also availed by me. The deductor, means the client, is only reimbursing me the exact amount. Then in that case 194R is applicable. But in the circular it is clearly mentioned, if the deductee is incurring these expenses in the form of a pure agent being covered under GST, all those conditions of pure agent are covered, then 194R is not applicable. Now what happens in our industry, there was a circular being issued which is circular number 715 dated 8th of August 1995. It says that on the out-of-pocket expenses, TDS under 194C or 194J is applicable. So if the reimbursement expenses are in nature of out-of-pocket expenses, then 194R cannot be applied in that case because there will be double taxation, means you cannot levy two types of TDS on the same transaction. So if the out-of-pocket expenses are covered under this circular, then 194R will not be applicable. Coming to the next issue, which is benefit or perquisite paid to social media influencer. So there are many kind of social media influencers who are promoting products or a promotional videos being created for the other person's products. Now, if that product is used by the social media influencer, then in that case TDS is applicable, this part. But if the product is returned back to the manufacturer, means he has just used the product for the sake of promotion and then returned back the same product to the manufacturer, then 194R is not applicable. Coming to the next issue, which is benefit perquisite provided for dealer conference. Now there are dealer meets or dealer conferences being conducted by various companies. If the dealer conference is for introduction or a new product launch, or it is for how to obtain orders from the market or how to differentiate your product with others, there are teaching sales techniques being conducted. In all four cases, this section is not applicable because again, this meetup was only for acknowledging or just telling about the own product and enhancement of the same. But vice versa, if case is there, this conference being conducted for a leisure trip or a leisure component being involved in that, the family members of the dealers are invited in that conference and there is a prior or overstay. For example, there is a conference 2 days ahead and I am calling the family members of the dealers 3 to 4 days prior. They are coming, accommodating, staying over there, and they are staying even after the conference has been concluded. Then in that case 194R is applicable. Now there were, in the first circular, what happened was only up to this part it was being informed that if there is a leisure component, TDS is applicable. Now there were some practical challenges being faced, which was around, if this kind of conferences which has a leisure component in that and the family members are being invited, then all the dealers should be invited, or it can be that we are calling only the important or the regional persons, whatever the case-to-case scenario of the company is, or the dealer invited is only one day before and one day after. So if there is only, for example, there is a conference to be conducted today, so definitely he cannot come, or he's coming from a very far away place, he may come one day prior and stay one day ahead of the event. And beneficial against each group activity, so we have to calculate, or the companies had to calculate, what is the beneficial amount, and for the each member being invited, dealer being invited, what is the amount that needs to be allocated. Now government says that if this is a practical challenge and you are not able to calculate the TDS amount for each dealer on each PAN, then you do not claim that expense. So if you are not claiming that expense in your P&L, you do not need to book the TDS component. But if you want to claim, then it is your responsibility of the organizer or the company. You have to deduct for every dealer. So you need to collect that PAN, you need to apportion the expense accordingly. But if that amount or that component is quite a good amount of component or an expense, then this activity needs to be done and it will be taxed under 194R. Coming to the next issue, which is the deduction of TDS by embassy or high commission. So in that case, TDS is not applicable. And if any bonus shares, right shares are being issued by a company in which public is substantially interested, then in that case there will be no 194R because there is no change in ownership or overall value. Cost of acquisition in that case is nil. So this was all about section 194R. If I talk about section 194S, which is again implemented from 1st of July 2022, 194S is TDS on transfer of virtual digital assets. So this was a new term or a new type of transactions being taking place in the market, and the government need to capture the TDS component or need to capture the flow of what is happening in the market. So this section is introduced. So there are two types of virtual digital assets. One is a cryptocurrency and the other one is a non-fungible tokens. So cryptocurrency is a digital currency which is an alternative form of payment created using encryption algorithms. So for cryptocurrency, encryptions are being used and it's a form of a digital currency. The use of encryption technologies means that the cryptocurrency function both as a currency as well as a virtual accounting system. But non-fungible tokens are a type of cryptocurrency, but they are using blockchain concept for this unique area. Now we need to understand what is the applicability. Deductor is same as 194R, so it can be a company, partnership firm, individual having turnover more than 1 CR or receipts greater than 50 lakh in case of professionals. There is a specified person in this case. Now specified person will be the person either he is not having any PGBP income, or if he is having PGBP income but the income is less than the above limits. That is, in case of business the limit is less than 1 CR and in case of professional the limit is less than 50 lakh. Deductee is again any resident, but rate of TDS in this case is 1%. Benefit to specified person is that he do not have to apply for TAN, and second 206AB, that is the higher deduction section, is not applicable to specified person. Threshold limit is 10,000 for normal deductees, and for specified persons the threshold limit is 50,000 per annum. Now this applicability from July, but for threshold limit application will be calculating the limit from 1st of April. Now we need to understand who is liable to deduct and pay TDS. So there are 5 situations which are being discussed about in the circular. The first situation is that there is a direct sale between the buyer and seller. So that is a very clear-cut case. There is a person who wants to buy the cryptocurrency or the virtual digital assets and he is paying to the seller. Now buyer is required to deduct TDS at the rate 1% and need to pay the balance 99% to the seller. The second situation in this case is if there is an involvement of exchange. So the virtual digital assets are being sold through exchange, then the buyer will be paying the exact amount. For example, in my case the amount is 10,000 and the exchange will be liable to deduct TDS at the rate 1% and paying the balance 9,900 to the original seller. The third situation is the virtual digital assets are sold through exchange in which a broker is involved. So generally this is the practical implication which is right now happening. So the buyer pays to the exchange 10,000. Now the broker and the exchange both have the liability to deduct TDS, they can have a written agreement and they can agree that TDS either shall be deducted by the exchange or by the broker. So that needs to be mutually decided among the two. Then the next situation is, if the sale of virtual digital asset is owned by exchange, so there is no seller, the exchange himself is owning that VDA, then in that case the exchange is providing the VDA, in return the buyer is paying to the exchange. So exchange, there will be two options for TDS deduction. First can be through the exchange. The exchange may deduct and pay TDS along with filing of TDS return in form 26QF. So 26QF is particularly being prepared for exchange declaring their transactions, and this income needs to be declared by the exchange in their income tax return and need to file the ITR. The second option available is that the buyer deducts. Now, if the buyer is deducting, buyer can either be a specified person or other than a specified person. If he is a specified person, then again, as TAN is not available for him, then the form is 26QE. But if he is an other than specified person, then normal 26Q is applicable and he can deduct the TDS. So it is available to both the parties. Then the next case is if sale of virtual digital assets are through exchange but the transaction is in kind. Now there is a party A and party B, but they are not doing any kind of a financial amount is not involved. Party B is providing a non-fungible token. In return, party A is giving his crypto through exchange to party B. So both the parties shall deduct TDS at the rate 1%, and if the exchange is deducting, then TDS of both the parties need to be deducted in form 26QF, 1% on NFT and 1% on crypto. Now talking about the next situation, which is sale of VDA through digital platform. So there are various digital payment platforms being applicable in the industry. If that is the scenario, then in that case liability to deduct is through the exchange and he needs to pay to the digital gateway balance amount to the government, that is 1%, and it is the responsibility of the digital platform to take undertaking from exchange for the applicable TDS deduction being done by the exchange. The next issue is 194Q applicable on sale of VDA? So the answer is no, because both the sections have 1% TDS and it's more of a goods being transacted. So the overriding section will be 194S and not 194Q. Then consideration for VDA, transfer of VDA is gross or net basis. So this is on net basis, that is after excluding GST or charges levied by the deductor. So this was all about both the sections. You can follow me more on Facebook, Twitter, LinkedIn, and you can subscribe to my channel for latest and further updates. Thank you very much.